I'm 26 years old and have been investing for almost exactly a year. For context, before we get too far, investing is my secondary goal. My first goal is paying off my student loan debt from grad school aggressively so that I can invest a little bit more. In this video, I am going to walk you through everything I have invested over the past really 8 months of investing, but over the past year. And I don't normally do this, but I'm just going to really quickly tell you who this video is for. It's for people like me that have a sense that investing is a thing, and maybe you're not really sure how to get started, where to get started, or if you should start at all, or if you're just not sure if you're on the right track. I have only a very small clue of what I'm doing, but I did just go ahead and start, and I want to share what that has done for me over the past 12 months. Unfortunately, this kind of video has to come with a few disclaimers, so let's run through them real quick. First, I don't have any experience, credentials, or education in finance. My goal for this video is to be transparent. Like I said, I want to show you what you can do if you start, even if you don't know anything, because I put off starting for a little bit too long because I didn't really know what I was doing. And if I know one thing, it's that time is of the essence. Doing that to yourself is just weaponized incompetence that just only hurts you. Second, I am not open to advice. I still know very little, technically nothing about investing. When I'm ready for it to be more of a priority, I will learn those things. This video is not a welcome invite for you to preach about your favorite ETF. This video is an opportunity for me to be transparent, to hopefully empower other people like me to take control of their wealth. And third, this is also not an opportunity or an open invite to compare your wealth to mine. Whether you have less or more doesn't really matter in this situation. If you're thinking about commenting, when I was 26 or I'm 26 and I have $3 million invested or anything along those lines, stop, drop, and roll away. Feel free to make your own video on your own channel about your current investments if you want to share them. Okay, now that we have some ground rules, let's go ahead and talk about why investing is a priority for me. I plan to retire one day, and ideally that retirement comes before I turn 65, but I don't have an exact strategy or timeline there yet because, like I said, this isn't my primary goal right now. My money is focused on paying off my 6 figures of student loan debt so I can decrease my required monthly expenses and shift some of that money towards other financial goals. To retire, I plan to have enough money invested to live off of the interest. Assuming I can rely on safely taking about 4% per year, I anticipate that I'll need about 2.5 million in retirement. Again, right now I'm not strategically investing to hit that number by a certain age, but I kind of figured out that getting started would be better than not getting started. I think it's helpful to understand why investing matters so that you can understand why you really should do it. I came to understand that the sooner I started, the more time my money had to grow, and time was better than making up for it later. So what I mean by this is that when you invest your money, it grows at the rate of whatever you have it invested in. The more time your money spends owning these things, though, the more time it has to grow. If the stock market entirely fails, then we have bigger problems and your money's not worth anything anyways. So by starting sooner, you give yourself more time for that money to increase. It allows you to put less in and earn more over time. So my strategy right now is using 2 investment options. The first is my 401k. I am investing enough to earn the company match that my company offers because that is free money. Because I haven't taken the time to learn, I go ahead and let my company decide where my money is going for me with a target date fund, which to my understanding is just a preset that optimizes for risk versus security based on when you think you're going to pull that money for retirement, which for me is 2065. Because I'm far away from that date, my money is invested a little bit more risky with more opportunity to grow. So 95% of my investments are in stocks, showing that my goal here is to aggressively grow my income because those have a potential for a higher rate of return versus something like a bond. But of course, stocks are also higher risk. Again, I didn't select these. They're just part of the target date fund. The other benefit of a 401k is that it lowers your taxable income because the money is invested pre-tax. So you get the tax benefits now, and then there are different tax penalties when you pull the money later, depending on when you pull it and how, and I don't understand any of that. Now for my Roth IRA, I am working towards investing the maximum possible each year, which is $7,000 if you're under the age of 50. So I contribute monthly, which comes out to about $583 a month. The balance of my 401k investment is $4,096.24. Since I started investing last year, my money has earned an average return of 8.4%. My company and I invested a combined $3,839, and the rest is interest from the growth of my money. Nice thing about an employer match is of the $3,839, I contributed $2,982. My employer contributed $745. I have $745 that is growing in the market that I didn't even have to put up myself. Doesn't sound like a ton, and right now it's really not, but that money will grow so much over the coming years. Now, the other type of investment account that I contribute to is a Roth IRA, which is a post-tax investment. Currently, I have $4,149 invested in this account. No strategy here, just vibes. Most of my money is in a safe mutual fund that tracks the S&P 500. I have some in an ETF that does the same, and some in an ETF that tracks the technology sector. You can find a ton of information on what mutual funds and ETFs are out there with a simple Google search. Mutual funds and exchange traded funds, or ETFs, are both kind of groups of stocks that allow you to invest in multiple stocks rather than just one, which helps mitigate your risk. They vary in that ETFs trade like a stock, so you can buy or sell anytime the market is open. The price does change throughout the day. Usually they have lower fees associated with them, and often there is no or a very low minimum to invest, so you can buy with just $1. This makes ETFs generally more flexible than mutual funds. While mutual funds can only be bought or sold after the market closes, price is set at the end of the day. They might come with higher fees, especially if you have a financial advisor that is managing your money for you, and there is often a minimum to start, so you have to have a little bit more money in order to purchase these.
This is me editing this video, realizing I am a dummy and never actually told you how much I have invested total. So here's a number. So as of filming this video, I had invested $8,981 over the course of under a year, which is pretty good.
Again, I have very limited knowledge on this topic. My goal is to empower you to continue to search for more information and get started. I hope to kind of be the stepping stone in this situation by showing you where I'm at so that you can know that, hey, maybe it's not so bad, or if she can do it, so can I. I am absolutely not the end all be all for investing. Quite simply, don't know what I'm doing, and yet I still have $8,000 invested, and I'm having a grand old time. Hopefully I accomplished this goal and you're feeling a lot better about your whole life right now and a lot more empowered and confident. If you want more transparency, more people admitting that they're still figuring it out, go ahead and hit subscribe, and I'll see you in the next video.